There is one company that owns a piece of almost everything you touch. Your phone, your morning coffee, the car you drive, the home you rent, all of it traces back to a single company most people have never heard of. It controls $10 trillion, more than the economy of every country on Earth except two. It owns a slice of Apple, Microsoft, Amazon, nearly every company that matters. Twice, the U.S. government handed it the keys during a financial crisis. It quietly became the largest landlord in America, and yet if I said its name on the street, almost nobody would recognize it. That name is BlackRock. So how did one company get this powerful, without you ever noticing? And what does it mean that they now know more than your own government? This is the autopsy of BlackRock. 1988. Wall Street is in an era of grand ambition and dangerous risk. A young trader named Larry Fink is working at First Boston. He was a genius, until one day he lost $100 million in a single afternoon. That humiliation changed him forever. He became obsessed with one thing: risk. In 1988, Fink founded BlackRock with 7 partners. They started in a single room with a single idea: manage risk better than anyone. Their first clients were pension funds, ordinary people's retirement savings. By 1995, BlackRock was managing $20 billion. In 1999, they went public. Shares jumped 30% on the first day. In 2006, they acquired Merrill Lynch Investment Management. That tripled their assets overnight. Then came the biggest deal of all. In 2009, BlackRock bought Barclays Global Investors, and with it, iShares. ETFs changed everything. Now anyone could invest in the entire stock market with a single click. And BlackRock sat at the center of that flow. By 2017, they crossed $5 trillion. Today, $10 trillion. That number is almost impossible to comprehend. If BlackRock were a country, it would be the 3rd largest economy in the world. But money is only part of the story. BlackRock's real power isn't the money they manage. It's information, data, knowledge. BlackRock knows more about global finance than any government on Earth. Here's why. Meet Aladdin. Aladdin is not a genie in a lamp. It's the most powerful financial system ever built. Asset liability debt and derivative investment network. Aladdin. This system analyzes risk across $21 trillion in assets. That is larger than the entire GDP of the United States. Aladdin runs 250 million calculations every single day, every second, around the clock, without interruption. Banks, insurance companies, pension funds, central banks, they all run on Aladdin. Even the U.S. Federal Reserve uses Aladdin. Think about that. A private company's system is managing the U.S. government's financial risk. If Aladdin went offline tomorrow, global financial markets would stop. There is no backup system, no alternative, nothing. Regulators call it systemic risk. BlackRock calls it competitive advantage. Aladdin gives BlackRock something no one else has: a complete real-time picture of global finance. They see markets moving before markets know they're moving. That information advantage is beyond anything any bank or government possesses. Some regulators are demanding transparency into how Aladdin works. BlackRock refuses. Aladdin is their most valuable trade secret. And while they refuse, the world keeps depending on a system no one controls. You've never heard of Aladdin, but Aladdin knows everything about your money. It's not just a financial tool. It's the nervous system of the global economy. BlackRock is the only company with access to it. But Aladdin is just one of BlackRock's sources of power. In 2008, the world discovered another: a financial crisis, and a phone call that changed everything. September 2008. The global financial system is collapsing. Lehman Brothers files for bankruptcy. Markets are in freefall. The U.S. government has no idea what to do. Hundreds of billions in toxic assets, and no one knows what they're worth. So the government calls BlackRock. The Federal Reserve hires BlackRock to manage the toxic assets of Bear Stearns, then AIG's assets, then Fannie Mae and Freddie Mac. BlackRock ends up managing $130 billion in bailout assets. At the same time, they're managing assets for competing banks. Conflict of interest? The government didn't have time to care. While others lost, BlackRock earned on every single crisis contract. The crisis gave them something money couldn't buy, the government's complete trust. After 2008, BlackRock became the unofficial financial advisor to the U.S. government. The real test came in 2020. COVID. The global economy shuts down in 2 weeks. And again, the Federal Reserve calls BlackRock. This time, BlackRock is buying corporate bonds on behalf of the government, including BlackRock's own ETFs. The government pays BlackRock to buy BlackRock products. That's called a conflict of interest. At BlackRock, they call it a business model. But let's talk about what hit ordinary people hardest. After the 2008 crisis, home prices collapsed. Millions of homes flooded the market at distressed prices. BlackRock saw an opportunity. In 2012, they started buying homes by the thousands. Through a subsidiary called Invitation Homes, BlackRock became America's largest landlord. Over 100,000 homes across 17 states. All cash, no mortgage, at speeds no ordinary buyer could match. A young family comes to view a house. An hour later, it's already sold. BlackRock had offered $50,000 over asking price. In cash, you cannot compete with Wall Street. Nobody can. The result, rental prices for homes jumped 40% in 5 years. A generation that can't afford to buy, only rent. From BlackRock. The average age of first home purchase in America rose from 29 to 38. This isn't an accident. It's an investment strategy. Congress called BlackRock in for a hearing. Are you buying up homes so ordinary Americans can't afford them? BlackRock responded, "We're creating housing supply. We're helping the market." They filed their annual report. Investors were thrilled. Meanwhile, another story was unfolding behind closed doors. In 2018, Larry Fink did something unexpected. He sent an open letter to the CEOs of the world's largest companies. Every company must serve a social purpose, or it will lose our support. For most CEOs, this was not a request. It was an order. ESG, environmental, social, and governance. BlackRock owns shares in almost every public company and votes those shares. That's called proxy voting, and it gives them the power to seat board members. Oil companies were forced to add climate directors to their boards. Banks were required to disclose climate risk in their financial reports. No single shareholder in history has ever wielded this kind of power. Critics call it corporate activism through financial leverage. Supporters call it responsible capitalism. Republican-led states began pulling pension money out of BlackRock. Florida, Texas, Louisiana, over 20 states declared a boycott. ESG is socialism through finance, they declared. In 2024, BlackRock quietly left the Climate Action Coalition. The same Larry Fink, who demanded climate directors, suddenly changed his mind. "We've always been focused on returns," BlackRock declared. Companies breathed a sigh of relief. BlackRock moved on. ESG came and went. But BlackRock's power over the corporate world never left. By now you might be asking, how did one company get this much power? The answer, through the oldest mechanism in politics, the revolving door. Brian Dees, director of Biden's National Economic Council. Before that, BlackRock. Tom Donilon, Biden's national security advisor. Before that, BlackRock. Pompeo's team, Biden's team. BlackRock advises both. 2 parties, 1 company. BlackRock doesn't pick sides. It invests in both, which means no matter who wins an election, BlackRock wins. In 2022, BlackRock spent over $3 million on lobbying. That buys influence over financial regulation, the very rules that govern them. The Federal Reserve Bank of New York is staffed with BlackRock alumni. So is the SEC. So is the Treasury Department. They help set the rules of the game they play in. Internationally, the same story. IMF, World Bank, European Central Bank. The European Union hired BlackRock to advise on banking regulation, the firm being regulated, advising on how to regulate it. Norway's sovereign wealth fund, the world's largest, holds assets through BlackRock. Japan's GPIF pension fund does too. The single biggest pension fund on the planet. Saudi Arabia, Singapore, Abu Dhabi, sovereign wealth funds managed by BlackRock. When nations save money, they often trust it to BlackRock. That means BlackRock manages money for competing states simultaneously. Which brings us to China. In 2021, BlackRock became the first foreign financial firm licensed to operate in China. They launched mutual funds for Chinese investors. Larry Fink met personally with Xi Jinping. U.S. lawmakers were furious. BlackRock is investing in companies linked to the Chinese military. BlackRock responded that they comply with all applicable laws. They continue operating in China. Business is business. One analyst put it bluntly. For BlackRock, geopolitics doesn't exist, only returns. That is the source of BlackRock's power. They exist above politics. They exist everywhere. But where does the most powerful company in history go from here? BlackRock has no intention of stopping at asset management. In 2024, they acquired global infrastructure partners for $12 billion. That means ports, airports, energy grids, water supplies. Infrastructure is what society cannot function without. And now a private company owns an ever larger share of it. BlackRock is also moving into private credit, lending directly to businesses, bypassing traditional banks entirely. If this plays out, BlackRock replaces banks as the primary lender to the economy. Their target? $4 trillion in private assets by 2030. Regulators are starting to panic. The EU has launched an antitrust investigation into BlackRock. In the U.S., several senators are demanding the company be broken up. BlackRock hired more lobbyists. Larry Fink says, capitalism must evolve. What exactly he means depends entirely on who's asking and what happens when the next financial crisis hits. Aladdin will be at the center of it all. If Aladdin gets it wrong, there is no system to catch the fall. That is the BlackRock paradox. They've become too big for the world to let them fail, and too big for anyone to control. This morning you woke up. Your pension fund's money is working inside BlackRock. You bought a coffee. The company that sold it is in BlackRock's portfolio. You drove to work. Your car, in their portfolio. The fuel, too. You pay rent. Your landlord may very well be BlackRock. The government that's supposed to protect you consults BlackRock. BlackRock is everywhere and nowhere, invisible but present in everything. Is this a problem? That depends on whether you think concentrating this much power in one place is normal. If you want to understand how the financial world really works, subscribe to Wealth Autopsy. We expose what the financial world wants kept in the dark. The next autopsy is coming.